All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for April 28th, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 474. So my name is David Cosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now, my charts. But we might also look at charts from our panel as well later in the episode. So today I have arranged for Dean Jenkins and Norman Hallett to join us again as our expert panel. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and good to talk to Dean again. It's been a while, Dean Jenkins, huh?
Hey, good to be here. Yeah.
Absolutely, absolutely. I thought Intel might have scoffed you up when they were looking for that new CEO. You know what I mean? They could have done worse, right?
Yeah, well, I have some ideas. Yeah.
Yeah, yeah. And Norm, good to talk to you again here. Now let's get into these markets a little bit because it's a great time to talk. We're right smack in the middle of the range, 6150 and 4800, and right here is around 50%. So let's start out with Dean. A little feedback on what you've been seeing and what do you think's going on right now?
All right. So, in terms of the S&P 500, of course,
Mhm.
it's been interesting, right? That's the old proverb, man, you live in interesting times,
Mhm.
right? Yeah, so, you know, uh, I like Elliott wave. That's kind of my main analysis technique. It's just, a very, very simple version of it. People overcomplicate it, I think. But looking at impulsive moves, corrective moves, and then a follow-on continuation impulsive move. And if we look at the S&P 500 right now, and I'm going to share my screen so I can
Yeah,
let me do
Yeah, you
this.
should be able to now.
Yeah, there we go. Okay. So I got the S&P 500. You guys see my screen okay?
right now, yep.
Yep. Okay. All right. So here's the S&P 500. And if we look at this run that started in 2023 up through all through last year, into the beginning of this year and then the correction, right? If we just do a quick, Fibonacci retracement and we say, well, from, this big move up, right, up to the top, and then what did the recent correction look like, right? These Fibonacci retracement zones, 38.2, 61.8. This is the after a big move up, the expected wave four correction. Wave four typically moves into ABC, and we had that A, B, C. So that was really a textbook wave four correction. And so
Really?
after that, we start looking for what's the extension? Has the next leg up begun, right? And I look at the momentum, the price oscillator here, and we've gone to zero. So we're about to cross into positive territory if it continues. And then I look, I don't look at, the candlestick, two or three candlesticks. I don't place a tremendous amount of weight on that. But I look at the overall pattern, and Dow theory tells us, a downtrend is a series of, lower lows, lower highs, right? Like we had in the correction, low, lower high, low, lower high, low, lower, right? And then an uptrend is a high, higher low, new high. So we have the what looks like beginning of an uptrend, and so we could say, what would the Fibonacci extension look like if that truly plays out in a wave five extension? So we use these same points, the low, the high, and then the correction, and then
Mm-hmm.
the 61.8 to 100%, that's the Fibonacci extension level.
Mm-hmm.
So this implies, hey, at least for now, we've got the beginning of an uptrend with a high, higher, low, new high, and it implies a target zone with a midpoint of about 6,500. So that could get blown up, right? Elliott wave is it gives you an edge, gives you a probability. It does not imply any kind of certainty, right? And the tariff deals and trade tensions and earnings and recession and rates, all these things, right, are potential headwinds, or they could develop the other way and really spark a rally, right? And there's a lot of analysts who think, hey, this is going to be the roaring 20s, man. Again, so just hey, just looking at, you know a very simple wave count. Wow, we had a big impulsive move. We had a correction, which is fully expected, and there's always some catalyst, and we had it. And then if it were to continue, boy, this would be a zone. So um, that's what I'm looking at, and we'll see if the case gets stronger and stronger for that, and it may. So that's
This
my.
this 5841 is pretty much the only ceiling that you're showing at this point, huh?
That isn't this 5841 is just a 50% extension. It's not really a meaningful level.
Yeah.
So in terms of obstacles, right, I'm looking at, we did have a death cross. The 50 crossed under the 200. And that's an ominous thing, right? It sounds ominous, right? The death cross,
Hmm.
right? And that can indicate a significant trend change. Now we had it, right? We had the big correction. So um, you look here, right? The 200-day moving average was a pretty significant resistance. It was a way down, it went back up. Ooh, hit resistance there. So, we could look at, the current 200-day moving average here as a potential resistance level, right?
Hmm.
If it breaks through that, right?
Yeah.
What's that level at? 57.46. So let's say 57.50. S&P above 57.50.
Hmm.
That's a good bullish story, I think.
I
So
think 100. I think you're 100%. Yeah.
yeah.
While we got you here, Dean, can I ask you a question?
No questions, man.
Because I always had a love for the waves, for Elliott, but it was always, as a day trader mostly, it was always tough for me to pinpoint what Elliott was trying to tell me. It's more of a general approach, but it can be specific. So my question to you, just like I look at the daily chart to see the undertow, the influence, if there's strong direction in the daily chart, I look to favor that if I get a trigger in my current account in the smaller time frame. Elliott, what is Elliott telling us in the broader time frame? What's above here? What's influencing down here? What is Elliott telling us in the bigger waves?
Like, what do you mean by the bigger waves?
Well, you're Elliott. I'm talking about decades and yearly and so on. Because the broader waves, in my experience, influence the shorter term waves.
So Elliott wave is fractal in that it can appear at any level of magnification, and in such there are what's called waves inside of waves, is what you're implying.
Right. I'm sorry, I didn't know. I forgot the
Yeah.
terminology.
So if we were to switch this, let me just change time frame, and let's go to a massively long period here, right? Let's go 20 years on a monthly
Beautiful, beautiful.
chart, right? Then oh, I'm glad you asked, because this is actually kind of cool. Let me get rid of these other lines, right? So this wave three that I pointed out, which was really 23, 24, and then this correction, right? Well, what we see was before there was really a wave three up and a four down, and this was five. You see, on
Mm.
the monthly, and let's see how close we got to the target if we just do this. Okay, so this says if we're just looking at a monthly chart that the target zone is up here, the midpoint, and isn't this interesting? That 6,500 we showed on the daily is still kind of the midpoint here.
Right.
So this is saying this was wave three. This was a correction, right? Which was back, the pandemic.
Mm.
And then since then it's been five, and we got a glitch here, but it's staying above the 200 period. In this case, it'd be 200 month, right? But still has room to go up into the full extension target. And
Interesting.
then, so I said, it's fractal. What's cool is, again, any level of magnification. And what's really important when I talk to people about Elliott wave, and they'll go, man, I just cannot see the wave count. And that's because sometimes it's not there. So here's the 10-minute chart, here's today, right? And if you tried to do an Elliott wave on this, right, we opened a little bit up, had a pretty strong pullback, although today's range was narrower than the last few weeks, um, it was still, opened up, pulled back, right? And if you were looking, so that would be a Elliott wave 3 down, and then you said, okay, I'm going to look for the 4 up and then the 5 down, try to catch it short, in the last third of the session. Well, it blew it because when we look at these retracements, we go, okay, here was the big impulsive move down. But as soon as the
Right,
um
at that hesitation, right?
we would look, okay, there's the impulsive move down. So when it gets up into this retracement zone, we'll look for the next move. But
Mhm.
it broke this red line, right? When it goes beyond this red line, it's like, oops, right? This is no longer a retracement. This is the new impulsive move, and there wasn't time,
I
right?
see.
So
Interesting.
you can't, when the rules get broken and there's just not always an Elliott wave count. Some charts are just um well, they're messy, right? But like Friday, well, it was kind of perfect, right? Here's this big impulsive move up, here's the pullback, and then there was the follow through, right? So that was a pretty nice setup if you were following intraday, is 10-minute intraday chart. So, it works when it works, but you can't force it and go, oh, like, let me lay these wave counts on and make them fit. They don't always fit.
So it sounds to me like the broader view from an Elliott standpoint is pretty much what we're seeing, and that's you think there's going to be more upside here at some point once this correction is done, and it seems to be defining that even more so.
Yeah,
Um,
and it's a safe bet that the market will eventually go higher.
right. I mean, who knew, right?
Yeah. Uh, uh, we could get a deeper correction because we did not hit the bottom of the zone, right? So we
I'm
could
so
go deep.
glad you said that.
Yeah. Uh,
That's part
but
of it.
so far, hey, it looks like a trend change. Just using Dow theory definition of a trend, we got a high, higher low, new high, and these are multiple candles per leg. This isn't just what are they, the Morning Star, or whatever those different formations.
Hanging man, right?
This is real, right? So I'm a little bit bullish and optimistic. And it's funny, people often I hear people say, well, in a volatile market, I want to be really, really cautious, so I'll use tighter stops. And if you think about that, um, that doesn't make any sense, does it? The average true range goes up. The price swings go up. So if you tighten your stops in a volatile market, what you're saying is, please stop me out. Right?
Mm.
And so what I do is I widen the stops to allow for some more volatility. But the formulas I use for risk management, right? The distance from your entry to the stop determines your position size. So in a
Mhm.
volatile market, I will go with a lower position size, a wider stop, right?
Yeah, I don't think people do enough with position sizing.
Yeah.
It's not taught enough. I think that's putting yourself in an environment where you have the high probability. You should increase the exposure. But right from the beginning, I'm not a big guy on adding, and once I take the initial move. But I agree with you.
Yeah. And then just while I'm riffing, and I'll just wait for Jim to stop me. In the current environment, I've been, looking, and I'm playing with AI as actually a scanning tool, and it's proving, you can't just don't let AI trade for you, man. Um, but to go, hey, help me find this, help me find that, and create some criteria. It's actually a pretty powerful tool. And I know David is has his Substack and is putting out AI picks, and I kind of watch those, and they're interesting. But what I'm looking for is, I go, who is reasonably insulated from the tariff. I don't want to call it a trade war, right? The tariff business, right? Um, it's like kind of a two-part. Who is actually relatively insulated from tariffs, but then got caught up in the downdraft, and maybe kind of overdone, right? And then as I use some AI, and it's like, well, what about Microsoft, man? So Microsoft, um, there's not too many tariffs on software, right? They don't ship virtually anything, right? But they got kind of caught up in it. And now I think people are going, wait a minute, Microsoft's an amazing cash cow, and there's no tariffs on software, and it's almost a consumer and business staple. Now, if you're using Microsoft and paying for 365 and the storage and whatever, right? You're not going to stop. You need that to run your business, to do your home, whatever, right? And it's a major cash cow. So it's like, wow, Microsoft, could be good. And they're going to be announcing earnings day after tomorrow. And then PayPal's kind of the same thing, right? Yeah, they don't ship physical goods. Um, and they're actually, they got caught up, and they got some competition, but they went and bought some of the competition. That's a good deal. And, this is kind of a trend change, higher, low, new high. We took it here and still in this one, and about 5% profit on the shares, which implies about 40% profit on the option. So yeah, just looking for who got caught up in the downdraft that maybe shouldn't have, right? And there's some other ones too, and some consumer staples, Palmolive, uh, Colgate Palmolive, Clorox, like, you know, so stuff like that. That's kind of where my focus has been. And it's fun using AI to go find ideas like that.
Dean, I was going to ask you a question because I've been looking at the Fibonacci numbers and they've been pretty good. The market peaked at 6150 and went down to 4800, and a 50% throwback took you to around 5500. Then it went, so that was a fib number. And then it went down to 5100, which is another fib number of the rally from 4800 to 5500. And now we're on this next rally here. And the next 61.8 comes in around 5650 or area, which is also the 50-day moving average. So I'm wondering out loud if this 5650 area where the 50-day is, and then the 5750 where the 200-day is, could be a insurmountable foe in the short run.
Well, both of these, the 50-day moving average, which is this lighter line, and the 200, which is a heavier line,
Mm-hmm.
They are potentially resistance areas for sure. And you can see the 200 here was in very recent history, right?
Mm-hmm.
So it's worth watching. That's why I said, in terms of, the wave 5 target was, I think, 6,500, and I said, if that were to be real, let's break up here above the 200, right? So that's but there could be trades before then for sure, right?
Yeah, it'll be interesting to see. Talk about interesting. It'll be very interesting to see if they can get through 5650 and 5750, because I don't think you have to wait for 5800 if that happens. I think it's probably going to go at that point.
Right.
Because when people start hearing the 200-day and the 50 days underneath the price, I think they're confident. And of course, if we're going up to those levels, the VIX is going to break down. If it breaks under 20, I think school gets let out as far as all the nervousness is concerned. So,
and I like applying a little bit of game theory to the market just
yeah,
for fun, right?
yeah.
Which is going, okay, what are some potential scenarios? And you lay out kind of macro scenarios, and then you go, what are the probable responses to the scenarios? So it's not really a game. It's just kind of trying to think strategically, right?
Mm-hmm.
And so, when the tariffs were announced, the market had its reaction, and it's kind of like, how much worse could the news get? Right?
Well,
I don't know. I think I don't know. A couple of years ago, I wouldn't know the answer to that question, but now it's anybody's guess. It could get worse. It could get worse.
If
Anyway.
So we got this week we got Amazon and Apple announcing.
Yeah.
Mhm.
And then we've got personal consumption and GDP.
Uh-huh.
So, the consumer is, 2/3 of the US economy, and so far they've held up,
No
right?
doubt.
And so if the consumer starts to weaken, right, and if GDP starts to shrink, and Amazon, almost like Walmart, it's like it is it is the consumer, right? It's an important proxy, right? And Amazon's, they're smart and they make money off of AWS and some other stuff. But if they indicate that consumer spending is like, uh-oh, well, that's a real problem, right?
Yeah.
And if
But
I
personal,
read I read a report today where the credit being used by the middle class has increased to buy food, not just being used, but using credit to buy food is now 28%, and it usually is 12%. So to your point, Dean, it's moving in that direction.
so if, and if that's true, right, then if people are using credit cards to just to survive, to buy food, right, that runs out. And hopefully, if people are in that position, they're becoming very discriminating in their purchases, right? They're not using DoorDash, right? They're doing cream tuna over rice and beans, right? So so,
We
so
used
the Ramsey thing, right? Rice and beans till you get your debt paid off. Um, so the point is that should show up as slowing consumer spending, right? And I have seen some reports that the default on credit is increasing slightly, and that's a problem, right? So we'll just have to watch that really close, see these reports come out, um, and see how it plays out. I think the Amazon report will be uh, pretty important.
hey, Norm, do you remember Martin
of
Zweig?
course, yes.
Well, they're pulling him out of the cobwebs here, out of the attic, and they're referring to the Zweig breath thrust. And are you familiar with this thing at all?
Is that from Playboy magazine?
Sounds like it. Anyway, it's some kind of a indicator that he had that they're dusting off, I guess, and it triggered for the 19th time in the last 80 years, and the aftermath of this triggering has been universally good. It's a momentum indicator measuring the ratio of advancers to the total advancers and decliners. And
Okay.
when the 10-day moving average goes from less than 40% to over 61.5% in 10 days or less with volume up, the 6-month returns on the S&P have been 15% on average, and the 12-month return has been 24%. So there's a lot of people running around waving that. I just was wondering if you had heard anything about it.
No, I haven't. I'm still waiting for a call from Harry Brown. But,
No, Joe Granville. You want to know if Joe
yeah, Joe
Granville's
Grant.
a
Well, yeah. I think
I
he's out now, right? He's a
think
free
so.
man. He's a free man.
I think so.
Can I share my screen because I have
Yeah, please,
a
and
little
share
bit.
some of your thoughts on the markets you are trying to focus on.
Okay, yeah, I have more of a caveman view of this. I just think that sometimes the markets seem to move in a way that um, that is based on the fact that an indicator is so popular that very new beginner traders and those that are halfway to professional are leaning on those indicators and therefore taking positions that defend those indicators in the case of supports and resistances. So when I look at a chart, I grade all the influences, the trend line, the double bottom, they all get a grade in my head. And then and then you come out with how you want to trade the short term. It's like in blackjack when the dealer is dealing out of the deck, a counter counts to 2, 3, 4, 5s, and 6s against the jacks, queens, kings, aces, and 10s. And when they don't replace the cards, am I getting too deep here? When they don't replace the cards and they deal, if there are 3 more low cards than high cards in the exposed cards, you know that there's 3 more 10 cards in the deck, and you hold on so the environment based on what you see, and you hold on and let the dealer bust. So
Right.
So I'm constantly adding up these. So I want to show you what I see this is the S&P chart. This of course is the tops line, this gold line here. And to me, a lot of people follow that. Once these two points were established and we were going lower, people were drawing this line. And I think that has a certain, now we've broken that line, but not with one trader that I've trained that's a very successful trader. He waits for another reason to go long here, a confirming signal. So, but what I'm saying is that this trend line gets a high grade. This is the 8-bar exponential moving average. I consider it the gold mean. You can see when things start to take direction, it'll hug that fairly well. Of course, just kind of by definition, you can move that around, but I find the 8 as a pretty good guide to where I'm going. And this is the 34, of course, a Fibonacci number that I think has that generally I use as another barrier when I'm short. When I'm short because of something that the 8 did, I want this 34 at my back. So when I go short, so this is a very nice this is a nice signal here, a nice signal here. I would be looking to favor the short side as long as the 8 is below the 34. So that's how I kind of use that. But in this particular situation, in the current, we're seeing the 34 trying to find a direction, the white here. We're seeing the 8 coming up to the 34 in this area. We see the tops line coming in this area. And we also see the market moved lower, had a correction, an absorption, and then tested it, came back, and then broke. So this is it tested this situation and it didn't hold. It came through. So this is an area that needs to be watched because on the way up, it's going to be resistance. And right here, again, you see it acted as resistance pretty well here and came up. And as you pointed out, we've taken this out, but this high, and maybe this is another uptrend. But if this continues and this becomes a big downtrend, they'll be talking about this as the as the reactionary high and not this. So all I'm saying is I got 1, which this is a big rating. I give this a big number. 1, 2, 34. This is, I believe this is the 50 here. So we just have a lot of reasons to believe we don't know where this is going right now, but generally you go with the trend. And the reason I believe that is that, and of course you need the trigger. It's just a thought. Generally, these lows like these dramatic lows need to be checked. I mean, you'll see a V bottom every once in a while, and when you do, they talk about it because it's kind of rare. Maybe in more modern markets with more machine influence, computer influence, there have been more. But generally, you need to check this. And I don't think this works as a check. Maybe it did. If this goes up, they'll call this the check of the bottom. But I don't see the drama. Usually, it's another feeling that we're going to even go lower, and it holds. That feeling wasn't here. So I just think there's an equal reason to believe that this market could go lower. And then my final thought is I always draw the horn of plenty with this. And, as this thing is waving right here, if this does break, this next wave could be seriously lower, taking this and taking this distance and projecting it lower. So I see possibilities either way based on my adding up the 2s, 3s, 4s, 5s, and 6s against the 10s. So that's the way I see it, and so I'm kind of caught here, but I'm waiting because I think whatever the move is, it's going to be fabulous for not only day traders but option traders. I mean, fabulous. Anyway, that's my thinking right now.
What other markets are you kind of keeping an eye on, Norm? Something with the gold or anything like that?
Gold's been, of course. I've been watching the gold silver ratio, which broke 110.
Yeah, my buddy told me that.
I don't know if you guys remember, but in 1980, I think when gold took off, 50 to 1 was the even
Extreme.
45 to 1. Now it's at 100 to 1. It's getting crazy. But I think that silver has It's got so many uses, and as far as the tariff war is concerned, is electronics. I'm sure that's holding silver down, and that's why gold has been so premium to it. But here's a situation. I mentioned that I like to see the 8 above the 34, and you can see how, of course, I'm going back in history. It's easy to point to this, but you can see how well it's maintained its distance. This is where, here it is at the crossing, and you've got some legs. For you prop traders out there, these kinds of things are high probability. If you get the right trigger, and of course this looks like one of our loaded gun triggers. This looks like another one here. But the idea is that when you do get a good trigger, if you have a good trigger, and you're trading with the 8 above the 34, and it's very close like this, to take a scalp is super high probability. Again, adding up the odds. I mean, the less you ask for, the more you're likely to get it. So as a day trader, I mean, you want to ask for something reasonable, but when you're in a sweet spot like this, and you can put on at least a couple of positions, and I always recommend at least 2, one being a scalp and another one being a runner, something where you can have legs. Because one thing I want to mention, I know the thought came in my head with a previous comment, but here's looking at this as this market was developing, it had a top. You thought, okay, double top will we may go lower. Now we did go a little bit lower, but my point is that I was talking about how novice traders and even less experienced traders, generally will look for this to hold, and it will hold a double top like this. 3 out of 4 times, maybe 4 out of 5 times, in some markets even more. But I always like to keep my powder dry with the majority. And in other words, if I take 5 small positions here, I may take 3 in the scalp and 2 right before this top, but I'll leave 1. And the reason is because most people are defending this top, and therefore, when the market moves higher, all of these people have to cover, and that's what causes these kinds of runs, I think. And so I always like to. It's always smart to follow the rules as far as the major, and I give it high points. It's going to hold this resistance point. That's a high grade in my book. But I like to keep that outside thing going, because when it does break, that's when you get the cover. So kind of want to bring that up. We were talking. I saw in the former analysis, something that led me to want to talk about that. But anyway, that's the way I see it. But here is the goal, and you can see it's the fact is now we have the 8 below the 34. But this is a strong market where we this could be even considered a whole accumulation. Unless we break down here, I don't see a problem in the near term. Gold actually corrected from about 110 to about 95 to 1, and now I think it'll probably check that high I just talked about. So I see a good time for gold. We're also, in a nice position to have some room to see some increase in the momentum. But and this is the 5 here. This right here is the so that's on a daily basis. This is, of course, the this is a bull market. No question about it.
Oh yeah, but it is definitely overdone, and it is trying to revert to the mean, but it's hard. It's having a hard time. 3,300, 3,280 was as far as it could get. But if that door were to open up, 32 and 3,150 could be in the cards.
Well, I think it's, if the 50% of my thinking is that this is going to break lower, the stock market, this is why this is going up. It's it is a run to safety. I mean, generally, it woke up. It hasn't been for decades almost. But
well, also these people know the deficits are running at 1.3 trillion or more, and we're only halfway through the fiscal year, and they know they're trying to tack at least 5 trillion onto the national debt ceiling. So those kind of future announcements probably get people a little concerned about the gold and stuff like that.
Yeah, but I think that I don't think that we're anywhere near the highs. I mean, we could see 5,000 gold and $50. We've seen $50. I saw $50 silver in 1980. So that to get there, but that would be the same kind of ratio. I mean, this is a strong market.
Yeah.
And when gold goes, it can, you see what happens. It can go. So
it's similar in the it doesn't have an unlimited quantity, so obviously that's always attractive as well.
yeah,
Hey,
I
Dean.
think if anybody's going to look at something really, it's really recently the euro dollar, how this is, a shift in world currency,
Mhm.
not the currency, but the respect, the power, whatever. And as we shift toward Europe, um, where we may move, where we seem to be moving into isolation, and maybe the abandonment of the U.S. dollar and some extreme thinking as far as buying oil and so on as the world currency. This would be a nice place to be, and this is a great chart. Love to know what you think about it from an Elliott standpoint. But this is something I think from a fundamental standpoint you've got to look at.
So is this still gold or which is
This is
this?
No,
euro dollar. This is the euro dollar.
Eurodollar.
Okay.
I mean, it's moved from 103 to 115. What is it? 116. Those are big moves.
Yeah.
Um,
And the dollar index hit that 98 number, which is kind of a big area. So if there's another trap door, the
yeah.
euro goes to 125. If there's not a trap door, euro goes and reverts to the mean.
150 is not would be the same place, 150 or 160 when gold hits 4,500, 5,000. So, all of these numbers are in the cards with our current unsettled
Yeah.
environment. I mean, we're seeing the drama. And I just think it's really just beginning.
Because the fiscal is out of control. I mean, there's no deficit reduction. The deficit's actually bigger than it was last year, and the debt ceiling is going up 5 trillion. So where's all this austerity coming from?
Yeah, this is the only other thing that people watch is the crude oil, which is an indicator that we may be in a slowed economy, less use for oil and gas. But this is at a more critical stage right now. That's checking that bottom way back from September, and seeing where we can advance. This almost looks like what we were looking at the equities charts, from the standpoint of making a correction about 50% from this particular high, and maybe even that Fibonacci number here, the 62. But anyway, it's a great market, and I just think that if people can get serious about this market and start, from a mental standpoint, saying I'm a professional trader and I'm going to do more of the right things, instead of saying I'm going to take a shot at this, let's see how it goes. If you can get serious about this market, this volatility is just made for us as traders. So I'm excited.
And Dean, we got a lot of stocks coming up after Wednesday with their earnings. You were mentioning Microsoft. We also have got Meta, of course, and Apple and Lilly and Amazon and Amgen and a lot of companies. Are there any that are on your radar that you think might have an opportunity on a short-term basis?
Well, I'm particularly interested in Microsoft. I made a bit of a case earlier where I don't think they are affected by tariffs, right? Now they're affected by a recession, but that, if that develops. But even then, not so much as discretionary, right? Because I think everybody who's paying their monthly Microsoft bill, you kind of need that to do your thing. So I think they're insulated to a high degree, certainly from tariffs and probably from any kind of recessionary pressure. So, but they got caught in the downdraft, and
Yeah.
so they're announcing the 30th after the close. Well, that's Wednesday, right?
Yep.
So, and they're kind of poised now. Is that you showing, Jim, or is that?
No, that's David.
That's mine.
So look at that. You kind of got a triple top right now, right? If you just look at the last three up moves, they're right there around, what is that? Just under 400, right? 390-ish. Not there. Under your blue line, right? You see the current, right? Yeah, 123, right? Um, so If it breaks out of that with earnings, let's at some point I should probably share rather than telling you where to go, right? Um,
Yeah, you can.
okay, let me we'll go ahead and do it. So I'm get it scaled and arranged here. Let me share my screen. So here's the Fibonacci retracement, right? Pretty good run up, right? From 22, 23, 24, and then started, this correction right into this Fibonacci retracement zone. So that's a pretty good wave four.
Mm-hmm.
And so now, here's this triple top that I was trying to articulate, right? We can even draw, just temporarily draw a resistance line right in here, right? One, two, three. Okay. Went up to it, pulled back, went up to it, pulled back. So if it breaks out of this, right, the wave five extension, so that would imply an uptrend, right? We would have a high, a higher low, a new high, right? And so if it does that, the extension target on this is on the new highs up here with the midpoint, just around 550. Um, and again, I think Microsoft, position, it's become what was it they used to say, right, to fund managers? Nobody gets fired for buying IBM, right? Well, they probably would now, but nobody gets fired for buying Microsoft, right? And they're a cash cow, and so um, that could be pretty good, and they're above the 50-day moving average. The 200 could be a barrier, but you could trade it. Depending on if it jumps on earnings, how much it jumps, is the reward to risk there? But you could trade it up to the 200, and if it breaks three, why then this zone becomes more and more likely. So, yeah, I like that for sure. Um, in the short term, so Microsoft is kind of a stable, like I said, stalwart kind of company now. Um, uh, for shorter term, higher volatility, but I like volatility with order. I don't like chaos.
Right.
But super micro has volatility with order. Right? When it moves. And
Mm-hmm.
it moves in very large percentages. Right. And these kind of moves are not
Dynamic.
out of the question, right? And that's a more than double. So those are a move that I kind of like. And it's just getting ready to break out of this
Mm-hmm.
this area here. And for something like super micro, there's a problem. Their earnings are not confirmed, and when they start dithering on the date, that's not a good sign, right?
No.
Let's get through that. But I know Jim, you're the option professor. Um,
Well, you should
on
funny you mention this in my newsletter. This is right at the top of the list of picks this week.
oh wow,
Yep,
so
because I see the breakout too, and I know when it goes, it goes. And if you can put up $3 and take out $25, it's not a bad bet. So, if this thing takes off, I'm looking at the 40 calls. And so if the 40 call, and I got until the 23rd on this idea. And so basically in the next month, if this thing gets the news and that thing is the beginning, like we got a breakaway gap there, maybe it's got a couple of buddies called runaway and exhaustion ahead of it. And so, going up to 50 is not out of the question. And, $3 to $10 is certainly worthwhile too.
yeah, and just going long to calls like you just suggested
Yeah.
could be a good play. I'm working on a new strategy to employ on something like this that
Mm-hmm.
I'm kind of having fun with. I've done it on a few others, and that's a back ratio call strategy, right?
Mm-hmm.
Which, for anybody listening who doesn't know what that is, what you do is you sell one either at the money or just in the money call. So you go short one, and then you buy two long just out of the money. And if you do, if you sell the short just in the money, then a couple strikes out, you can actually end up with a net credit. And this, might be $50, right? And then if you lose, you're going to lose the difference between the strikes. So in this case, 300 bucks maybe, but it has unlimited upside, right? If the thing really rocks, um, and so, it's like, okay, I'll make $50, I'll lose $200, or I'll make $1,000. That's a pretty good profile, right?
Mhm.
So I like that. It's certainly simpler to say, hey, go long to calls, man. Go strike into money. You were out, just out, right? You were at the 40s, but I like higher delta, paying a little less for IV, right?
Yeah.
For a directional play like that. So
Yeah, because this one here, it has a setup where it does look like it's on the verge. And if it is on the verge and going to go way up, you know, having just a vanilla buy the thing is not a terrible thing. I
I
mean,
like
it's,
I like I like the choice of the 40 strike because that's you're not asking it to break through really the 50 and this is where the pop comes in in the premium
oh yeah,
when you reach the strike price and
yeah,
then from then up, the intrinsic replaces the extrinsic and it slows down, but the fact that you would take it there next to the 50, I think it's a good idea.
what expiration do you like on these, Jim?
I went with May 23rd. I don't think if it happens by then, I don't want to be involved. So I would give this thing some rope, but I wouldn't give it all the way till May 23rd.
Yeah, so the
So
40 is only 280, right?
yeah,
That's
280, right? Yeah, yeah,
right. So, even with a small account, you can play that, or a bigger account, you can go multiple, which gives you the opportunity to scale out,
hmm
incrementally, some
yeah,
flexibility. Yeah. So, yeah, I like it.
yeah. If it's going to happen, it's a reasonable premium because a $10 move on this stock would really get things going, and they do go when they go. Plus, Nvidia and or some of these other guys are announcing, that the business is still pretty strong.
Yeah.
You know, the AI stuff has not gone away. And these guys, well, here's the other thing. These guys keep announcing that they're not cutting CapEx. I mean, Google said they're not cutting CapEx. If these other big guys this week say the same thing, that's probably why you also think it looks good. Because if they all are not cutting CapEx, well, that means NVIDIA, Supermicro, and Taiwan Semi and Broadcom are all in business.
Yeah. And this one, you know, it goes, right?
Yeah, yeah, yeah.
If these moves here don't look that big, but from 30 to 37, right?
Yeah,
That's a 20% move. So, that's a big deal.
yeah. And that's good momentum.
What's that?
That's good momentum.
Oh, yeah.
Yeah, because once that RSI gets above 60, that's when you can really make money on calls because that's when the RSI can go from 60 to 70 or 80. And of course, that's when the premiums jump out of the woodwork. So I love to see a momentum thing as it's going in through the 60 number on RSI because I know that if this thing accelerates, these premiums are going to really accelerate. I always try to tell people the biggest money on options are made once we get above 60 on the RSI or on puts once we get under 40 on the RSI, because those are the acceleration phases. And volatility acceleration is what you need if you want to make the big bucks on buying options.
Agreed.
Yeah. Um, Norm, do you have any other markets that you were kind of looking at? I know, or you want to go over a little bit about how you help people with the mental side of the business
Yeah,
as well?
I'm doing two things.
Yeah, yeah,
Primarily, I work with traders on our trading plan that's really is fit for the prop trading market, the loaded gun simple trading plan. So we have that we work with on a coaching basis. But also, actually, the disciplined trader is a spinoff of the mother company, Subconscious Training Corporation, which started in 2000, November of 2000, where we focused solely on the mental and emotional piece because that's the piece where you can go wrong, where all traders seem to go wrong. I always talk about the fact that you can that 90% of traders do little or nothing for the mental part. They don't journal, they don't do any meditating, they don't relax, they don't do anything for the mental game. 90% of people, and 90% of traders lose no matter what they're trading. I mean, these are both facts. I believe those facts largely belong together because whether you look at the market from an Elliott standpoint or you look at the market from a caveman standpoint, you can both be right and find and come to the same conclusions, but you've got to adapt, a reasonable strategy. And to do that, and once you have that reasonable strategy, of which there are many, then it's a matter of you. And so, with the thousands of strategies, probably 100 really good ones out there. There are thousands out there. Maybe there's 100 great ones, and you'll run across them. It becomes you. You're the reason generally that you get in your own way. So that's the problem, is people don't want to hear that. So,
Yeah.
I need to also, have a bustling firm through another avenue, and that's through helping people with what they want. How do I make money, and what's the hottest thing? Once I slow them down and teach them to fish in the caveman way, that's worked for me for so long. That's where it's at. But you need the mental piece, and but even the things that I offer, loaded gun. Not everybody's winning. I would say it's at least 50-50. I don't know what it is. They have the same, um, they have the same potential. But they cannot. They come to me. They say, "I just can't." Somehow, I move my stop, or that's mental. And so it doesn't have, whether it's my great trading plan or Dean's great trading plan, or Michael's. It doesn't really matter. It's a matter of whether you're together enough to believe in the plan, adopt the plan, and then run the plan. Otherwise, you're fooling yourself. So that's what we do. If you go to thedisciplinedtrader.com, you can see what we offer there. I'd at least get on. There's a free at thedisciplinedtrader.com. You'll see a black stripe, and there it is right there, that black stripe, and you can opt in for the 4-minute drills. I've done over 200 of them. They're 4-minute videos that kind of get you between the eyes, kind of like what I'm doing, only I'm being nice to you now. I believe in recognizing the fact that you're here to win, and I appreciate that, but that's not going to happen unless you get serious. And so these videos are all a 4-minute, just talking about whatever pain you're probably going through and what you need to do to solve it. So get on that list. You'll be delivered one a week. You get to know me a little bit more.
Yeah, that'd be perfect. Dean, as far as what you are doing up there, you want to share a little bit about how you're helping people?
Yeah, sure. I'm transitioning from, kind of a website base. I still have that website. David's got it going here. But I'm really putting a lot of attention into my new Substack. And there it is. So I do, twice a week market analysis, and then we have a paid area where um, we send out picks, a watch list through a full qualification funnel, and then finally qualified managed trades. And so, like, yeah, just yesterday Sunday, Wednesday I do a market analysis, right, and reality over headlines, and uh, I sure agree with an awful lot of what Norm said, right, about, psychology. It's important. I launched a new book late last year, December, called The 7 Habits of Successful Traders. And it talks about a lot of the things that Norm talked about, right? It's on Amazon. I use KDP Publishing. Um, uh, so yeah, you might want to check that out. Hopefully it's a pretty good, easy read. But just, what is it? And again, the 7 Habits of Successful Trader, we don't talk about a single indicator or setup or anything, because it doesn't matter, right? The healthy, mature trader's mindset transcends any kind of indicators that you're using. Like, I agree with Norm. There's 100 different setups and indicator sets and whatever you could use to qualify and probably be successful in trading. But you got to get your head right. And when I've done coaching, I think it's similar to, like, like in the first couple sessions, I'll talk to people, go, tell me what's been going on. It's like, okay, how about this? How about you stop trading,
Mhm.
right now, right? No more trades until we get this under control a little bit, right? Because you're just getting killed, right? And that's no fun. That's not the goal, right? And the first question before taking any trade has to be, how much am I willing to lose on this trade? Because it could lose, and it might, right? And I think, it's so easy to go into it going, wow, this is a great setup. Everything's lined up, man. I'm gonna, I'm gonna win, right? But you might not, and so If not, well, how much? How much am I willing to lose if it doesn't work out? I'm not a huge baseball fan, but I understand that if you bat about 300, you're in the Hall of Fame for sure. Is that right?
Pretty much.
Right. Well, 300 is what, 30%?
Mhm.
Right. Um, so, you know, how does that apply to trading? Well, you're not going to hit a home run every time, right? So if that's true, then, you know, I mean, some trades are going to lose and you go, okay, how much are you willing to lose? How much would be kind of pain-free, both from a financial standpoint and an emotional standpoint? Because even if you can afford it, you know, three losers in a row starts to erode your confidence.
Mhm.
So, you know, how are you going to deal with that? So, Seven Habits of Successful Traders, it's on Amazon. It's doing pretty well. Got good feedback. And then the Substack, hey, you know, sign up for the free thing, see if you like what we got going on there, and then check out the paid part of that. So that's
Sounds Yeah, that sounds good. So everybody take advantage of both Norm and Dean's stuff there, so you get educated and get knowing how they can help you. As far as Option Professor is concerned, we do have the options alert that goes out every Sunday night. I talked about Super Micro earlier today. And we also have the options class that comes with it, as well as coaching. So if you don't know much about options, I can teach you because I've been doing it for many, many decades. So there'll be a link that David will put up, and you can click on that to find out more about how that works. Guys, we'll be talking again. Let's see how these markets pan out. Let's hope Dean's extrapolation takes us up to 6,500. It's a happier world up there. And we'll see how things pan out in the next month or so as all these deals that they're going to make with all these countries come to or don't come to. So until we talk again, Dean and Norm, good to talk to you again, and we'll be talking to you soon.
all
Thank
right.
you. Good seeing you, Dean.
Good stuff. Yeah, you too.
Back to David.
All right. Thanks, guys. Great discussion today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can get the Timing Research updates on Substack now as well. And yeah, so I just want to thank my guests again for today. Oh, also, real fast, be sure to mark your calendar for our next big Synergy Trader event. So that will be May 13th, 14th, and 15th. We'll have 30 different educational presentations, and the theme for that will be Pillars of a Profitable Trading Plan. And all three of um, our panel for today is confirmed for that event. So again, May 13th, 14th, and 15th, about 2 weeks from now. That'll be a good event. So be sure to mark your calendar and join us on TimingResearch.com. And just want to thank my panel again for today. Dean Jenkins of FollowMeTrades.com, Norman Hallett of TheDisciplinedTrader.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.